Well,
There's
the
just
biggest risk on that one also is that the broker changes the interest
yeah,
mid-trade and you got a bunch of stuff open, and instead of
yeah.
getting paid, now you're paying.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right, we're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question here. This one's coming from Gabriel, and he says, I would like to find a strategy that suits my personality and my work life requirements. I want to feel confident in managing my risk and making consistent profits with hedging.
Hmm. Okay.
Yep.
Yeah. Okay. So first thought there, work-life balance. I mean, I think you can have a goal at the end of the day, but I think you're going to have to put in the time up front in order to develop that strategy. So I wouldn't worry too much about that work-life balance. A lot of times when I hear work-life balance, it just a lot of people, not maybe not this person, but a lot of people say I just don't want to do the work. I just want to like have a super simple strategy and maybe have an EA or something like that, right? That's what I would say to that. And then with hedging, yeah, I mean it's certainly possible, right? I mean the first thing that comes to mind is like hedging in the stock market, right? With options. I think that appears to be, I don't do it, but it appears to be a very hands-off type of thing. You can check it once a day.
Hmm.
People seem to make fairly consistent profits with it. So I would say maybe check that out if you're looking for something that's more hands-off. Uh, but but yeah, I mean that's what I would say about hedging. What do you think?
Yeah. Yeah. I mean, when I think of hedging, I just think of the carry trade in currency trading where you basically collect interest. In theory, that could come back now, given the interest rate differential. So you could do that. You could trade like a grid strategy and then hedge it with options. I've done that. There's a lot that you could do. It's just you could try arbitrage, although I would probably just do arbitrage in crypto right now, just because there are a lot of inefficiencies in crypto, and you could easily set up like an automated system. It's quite easy actually in crypto where you're basically buying on one exchange and selling on another. There's a lot of those bots
Yeah,
around now.
yeah,
So that's going to go away, obviously. I mean, I knew like 11-year-old kids that were doing that 12 years ago with Bitcoin, right?
hmm
Like they were arbitraging Bitcoin onto, and it took them about half hour per trade, but it's streamlined more now, so you could do that. So yeah, I mean, there's a lot of different approaches, but it sounds like when people say with hedging, it's like they want to it's like I want to take risk by not taking any risk. There's always risk, right? Like so,
yeah,
for
yeah,
example, if you're running the carry trade, there's a risk that your broker, well, there's always a risk that your broker goes bust, but there's a risk that your broker slips you when you get in the trade and it'll take you a while before you get to break even. Like, yeah, there's always risk, right?
well,
There's
the
just,
biggest risk on that one also is that the broker changes the interest
yeah,
mid-trade and you got a bunch of stuff open, and instead of
yeah,
getting paid, now you're paying. So that's something that
yeah,
you got to be careful
yeah,
about.
yeah, exactly. Yeah, yeah. Or like the broker tells you that they have an interest-free account, but really they have these fees that they charge you.
Yeah,
But they're not,
yeah,
it's not interest. It's not interest. It's something else, right? It's
yeah, yeah,
a
yeah.
fees for holding the trade open and stuff like that. So there's a lot to look at. If I was him though, I would probably just set up, and I know it sounds complicated, but if I was really wanting to do something like as about as risk free as possible, I would set up an arbitrage bot in crypto, and I would just run those. That's what I would do.
Mm,
You know,
mm,
in liquid enough at liquid enough brokers, I would just do that and just kind of ramp it up slowly as you get more comfortable. That's what I would do.
mm.
Yeah,
Okay, cool.
yeah.
Yeah, yeah. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.